Welcome back. You're watching Stock Watch with me, Zinati Guma, and joining me to take your stock-related questions tonight are Jean Pierre Verster from Protea Capital Management and Ricus from PSG Hole-in-One Rumsig. Be sure to send your questions on email at stockwatch@bdtv.co.za or via SMS to 41392 or on X using the hashtag StockWatch. Thank you so much for your time, gents. It seems like a little bit of weird trading as we're starting off the second half of 2024. Even the rand is now back above 18 rand 60 against the US dollar. Ricus, just on our side in terms of what we're seeing on the JSE and the rand, has the GNU optimism or initial optimism been worked out of the system yet?
Yeah, I mean it's very early days as we face the GNU brave worlds, but today certainly financials were sold off after a sterling performance yesterday. The rand weakened, as you said. A lot of that has to do with a bit of dollar strength, but also just the initial euphoria surrounding the announcement of the new cabinet dissipating a little bit, and the laggards, in other words, rand hedge industrials, and to a certain extent resources gained today.
All right. On your side, JP, I mean, also was this, Ricus talks about dollar strength, was that all to do with the Fed?
Yes, there was some comments from Jerome Powell out, and on the back of those comments, the dollar strengthened, a lot of currencies weakened, including the rand. So yes, it's one of those things. You mentioned at the beginning of your question, you said markets are trading in a weird way. Well,
yeah.
We have weird participants in markets, Zinati. And when you have weird participants, you have weird moves.
Yeah.
So today was one of those where it was the exact opposite of the last few days, as happens every now and then.
Well, actually, something that I noticed when I went on to SENS, the telecom sector, Telecom was down heavily today. I think at some point almost 7%, and I think MTN was down 4%. And it just seems like we just have continued weakness in that telecoms sector, Ricus. Is this something that we're just going to have to bear for a while?
Looks like it. I'm not sure why Telecom took a knock today, but yeah, just over the past months, that whole sector has not been performing, and for a variety of reasons, whether it be the consumer under pressure or problems getting money out of Nigeria and other African countries as far as MTN is concerned. Telecom obviously busy with that, with a huge restructure as well. So, but not a sector that's really in favor locally.
It's quite interesting because when they released their numbers recently, it seems that markets were quite encouraged by the progress that they have made in some of their strategic moves and even their financial metrics. JP, has that basically dissipated at this point?
It seems that way, that people had some optimism and that has given way for realism. There was also a report that came out from a sell-side broker, one of the banks, their trading division, saying that they are neutral on Telkom now. We'll probably need to wait 2 years before we see a dividend. And, maybe the dividend might not be as big as a lot of people thought just after the results. So sometimes, when the result announcement comes out, you sometimes have got 50 to 100 pages to go through, especially if, as often happens, the full annual financial statements are also released at the time of full year results, which means that it's very difficult to immediately take all this new information and discount it into the share price and immediately have an accurate fair value, and the share price necessarily then tracks that new fair value. Sometimes it takes a few days. We're not quite yet where the US is, where they've got neuro-linguistic programming and AI automatically reading news reports, and within a fraction of a second, you have shares jumping or dropping 20 or 30% because the AI has been programmed to look for that one variable that everyone is focused on and assess it relative to the expectations. In our market, it still takes a few days, I would say, before a lengthy announcement, like a result, is discounted fully into share prices.
All right. Well, let's get into some of the questions that have come in. Quite an interesting one. Here, any views on a target price for Omnia with the Department of Agriculture under the DA? Yeah, Ricus, have you factored that in as a consideration when looking at Omnia or not? The fact that the Department of Agriculture is now under the opposition.
Well, we'll have to see what happens, obviously, whether the new broom sweeps clean or not. But the market obviously, well, apart from the fact that it's announced a special dividend, which gave some upwards impetus to the share price itself over the past few days, I think the announcement of John Steenhuisen being, in his position as with a lot of other industrial counters, but provided specific support for the share. So who knows? It can go and revisit, I don't know, the sort of 75 Rand level easily. But it is also part of the general volatility we've seen over the past few days, between extreme optimism and then, negative sentiment coming in again.
Yeah, all right. Well, I mean, yeah, as Ricus says, the share has actually run quite a lot, and obviously on the back of the announcement of the special dividend. JP, where are you seeing the share price going? Do you think that there could be more upside in terms of Omnia? Yeah, your take on maybe a target price also?
I think the turnaround here has been quite spectacular relative to the problems they had 4 or 5 years ago when they got the balance sheet in a very bad shape. It's a very volatile working capital heavy business. So they came through that. I think they've learned their lessons. They needed to do a rights issue at the time. And rather than John Deereisen or John Steenhuisen, I've seen the jokes all day on social media, being a big impetus for Omnia's share price, they basically will benefit from selling more fertilizer. And they will make a bigger margin when the urea to fertilizer margin or ratio is in their to their benefit. And the last while it has been. So urea, which is the natural product, was more expensive than their product, which is basically a synthetic product to make fertilizer. So yes, there might be more farmers who decide to farm because they have more confidence in the minister. I don't really think so. So for me, I still think there's value at the current share price in Omnia because they've fixed the balance sheet and they've learned their problems. But it is a commodity business. So I wouldn't get too carried away. I prefer businesses with pricing power, and Omnia doesn't really have pricing power for the majority of their products and services. They've got a little bit for some of the more niche products and services. So I like it, but I would score it a 6.5 out of 10 from a quality perspective, and that means I wouldn't get too carried away in terms of buying or paying up for Omnia shares.
All right. Well, what about Bullwin? There's a question here. Can you ask the panel about the long-term merits of an investment in Bullwin Properties? If I remember correctly, the numbers didn't look so good when they came out with results about 2 months ago, 1.5 months ago. Ricus, just looking at Bullwin there in the property sector, what's your take?
Well, I sort of, the take that I have on that is just looking at the share price declining. They're obviously in a very difficult section of the market. It's not something that private housing and selling or renting of that, not exactly a booming business in South Africa. So it's not a company that I'm following at the moment. And as you've said, just glancing at results every 6 months, I can't really see a huge turnaround in its fortunes.
JP, would you actually be staying away from residential property companies at this point or not?
I am quite cautious about property developers. So I spoke about the urea to ammonia ratio earlier. Now I'll speak about the new build to existing house ratio. And at the moment, it is much cheaper to buy an existing house or flat or townhouse relative to building one, and therefore relative to someone who builds it and then immediately wants to sell it. You can buy a second-hand property at a much cheaper rate than a newly built one. And unfortunately, Baldwin is in the business of building properties and selling them new. They sort of started taking some of their properties and putting it in a special purpose vehicle and renting them out, saying they can get a better yield. But that's very capital intensive. They also bought a new head office just over a year ago, which I don't think was good capital allocation, because if you look at the balance sheet now, they could do with some more cash, because there are some delays with transfers. You can see it's a tough market to sell all their different phases of their developments. So yes, I'd be cautious again, and I'm sure this has been said a lot of times in the last week, but if you are more positive about South Africa because of the political developments, you would hope that that positive sentiment could turn into a stronger economy, more people moving out of houses with, staying with their parents or extended family, looking for their own townhouse, and that would increase demand for Baldwin's product, and then they can do well. But until we get to that point, I would be cautious, because the nature of a property developer in a tough economy, it's a very difficult business.
Yeah, the way things are going in the economy, JP, I actually want to do the reverse. I want to go back to my mom's house.
Exactly.
Ricus, you talk about a difficult sector. Are there any pockets of opportunity or safety within the property sector at the moment?
Yeah, it sort of aligns with my stock pick, so let's wait.
Okay.
So let's wait for that.
Okay, we'll keep that thought. JP, on your side, would there be any pockets of opportunity or safety that you'd be looking for in that property sector?
Well, I think it's always, what you get at what price. So the price comes into the equation. So when things are tough, sometimes, as long as they're not too tough, you can compensate for that with a lower purchase price.
Okay.
And if I look at the property sector, I would say the one area which looks a bit better than the rest is retail. It seems like a lot of our malls have come through relatively unscathed. Logistics properties also relatively unscathed. I wouldn't look at office properties, and I would be cautious about new developments. So yes, some of the REITs are trading at 30-40% discounts to NAV, and those NAVs might not grow in the next few years, but they have stopped going backwards. So many of the large REITs, I would say, is interesting, and then offshore property as well. So NEPI, for instance, in Eastern Europe, they've got better fundamentals. Yes, the rand has strengthened now. That's not great for offshore property from a rand investor perspective. But any of the major REITs today, I would say, look more attractive than a month or two ago, given the price at which you can buy them now.
All right. There's a question here on Tongaat Hulett. I'm not sure if you guys still look at that one. I see Tongaat Hulett issued a lengthy SENS this afternoon, alluding to a possible reissuance of shares to keep the company afloat and remain listed on the JSE. I'm currently a shareholder in the beleaguered company. Does today's SENS mean there is hope for us shareholders who have been watching things unfold from the sidelines since July 2022? Is that not too long to be watching from the sidelines, JP, when things have just been going south?
So I'm not even on the sidelines. I'm not even on the in the stadium. I'm outside of the stadium because I haven't read that SENS. So I can't comment. But I must say, when a company goes into business rescue and there was fraud or shenanigans, as there was with Tongaat Hulett, I sort of lose interest. So I haven't looked, no.
Yeah, no, I figured. Ricus, on your side?
Yeah, no, it's the old adage. I won't start it, but if you've got an accountant running a business, then you're probably past growth, and if you've got lawyers running it, then you're in deep trouble, and that's what's happened with Tongaat.
Yeah.
So they are recapping it. I'm not sure. I mean, I just saw that literally.
Yeah.
So it's of interest sake, but if you've got it, you can't do anything with it. So hopefully it comes out of or gets recapitalized, gets relisted, and then I really wouldn't be looking for a turnaround on it because there's a lot of baggage.
All right. Well,
just to add to that, Zanati, sometimes when people react like both Ricus and I did, it's an amazing opportunity because no one wants to touch something just because of its history. and its future might be quite different to its history. So while I haven't read it, I can promise you I will read it. And sometimes it's an opportunity if everyone says, don't touch it because of its checkered history, if the future looks very different to the history. So it could be one that you need to do the homework. And every now and then, if you turn over some rocks, most of the times, you don't get much, but sometimes there's a little nugget of gold that could be hidden below underneath the rock.
All right, all right. Let's go into the next question. Palladium. What made the price of palladium spike up recently? Is there anything specific, JP?
I haven't seen anything specific. If I look at the PGM price, I look at the basket. So it's both. It's not only palladium; it's platinum as well, and rhodium, which is the one that was in a bubble and dropped by 75% over the last 3 years. And that had a little bit of a spike, and then literally in the last week or two, it came back down again. The PGM price, the basket. So no, as we see today as well, Tesla came out with. The number of deliveries, just under 50,000, I think. BYD came out with deliveries in the last week. The whole world is still moving towards EVs. So that means less internal combustion engines, less need for catalytic converters, less need for palladium, which is the catalyst in the catalytic converter. So I'm still very cautious about the whole PGM space.
Your side, Ricus, caution on PGM or not? Maybe you think that it's a good buying opportunity.
Well, fundamentally, I agree with JP. There's a lot of uncertainty as to how hybrids are going to affect that group of metals. EV cells, obviously, is it going to be worse than expected, better than expected? The spike itself, I suspect, had just had to do with a bit of dollar weakness. As JP said, it peaked at about, or platinum price peaked at above 1,000 about 6 days ago, and it's trading back at 969.40, and I think palladium probably just mirrored that price move.
All right. Well, there's an interesting one here on U.S. human resources companies. What's the panel's view on the U.S. human resources management software companies like ADP? Is there any likelihood that they will be disrupted by AI? JP, is this something that you've looked at?
As far as I know, that's Alliance Data Processing. I haven't looked at it for a number of years. A very solid company. The last time I looked, with a very good track record. And if I think about AI, I wouldn't think that human resources, and that's more payroll software, but it's part of human resources, but it's sort of like a payment system. It's how do you pay, with a few thousand employees, make sure you deduct the tax correctly, make sure everyone gets the right salary, and you scale that across many companies, and you get a system that needs to be very complex and very good, and it's a payment system and an administration system. That's what they basically do. And I don't know if AI is going to disrupt that, because AI for me is about creativity, and it's about automation that isn't simple. It's complex automation. And when automation is relatively simple, you can program it, and there are such programs like what ADP offers. And I wouldn't think that's in the core of what AI will disrupt. For me, AI will disrupt things like, literally software developers or media content creators. That for me, when you have that more complexity in it, is more an area where AI can disrupt rather than payment and HR and payroll software.
Ricus, is ADP one that is on your radar or not?
Not at the moment, but yes, the nuts and bolts, paying people payrolls, pensions, that kind of thing. I don't think there's anything new to that really, although I'm probably going to be completely wrong. But as far as human resources itself within a company, for example, is concerned, that's going to become very interesting, because it's also an interpretation of historical data. A company can go in and say, well, what trends are there in people leaving this company? Analyze its own historic database. And that's where things like large language models becomes interesting.
Right. Well, let's take a look at the next question. Is CA Sales a buy for the long term? JP?
I like the company. If you go back to the history, they were listed on the JSE, they delisted, and they listed on the Cape Town Stock Exchange, and they moved to the JSE. And in that whole process, for many years, we held CSLs in our funds. We sold it recently because, in my opinion, it got a bit expensive. But I might regret it, because the one thing I've learned is one of the mistakes people make that become very costly is if you think a very good company gets too expensive and you sell the shares. And I do think CSL is a very good company. So it might be expensive today, but I might live to regret it, because expensive companies tend to become less expensive as they grow their earnings at an above average rate. So CSL has got a very good position competitively across Africa, where they move fast-moving consumer goods, deliver it to shops, pack the shops, make sure the pamphlets and everything to try and get more sales is done in the right way. So it's a good company, just a little bit too expensive at the moment for my liking.
Yeah. Ricus, are you allowed to talk about CA sales since the unbundling?
Yeah. Well, they certainly became a heck of a lot more expensive over the past 2 days. And we were talking at the start of the program how positive sentiment can affect prices. And I mean, I think it's a perfect example of, wow, if you have a bit of a turnaround, who's going to benefit from that? And if you take CA Sales, a huge logistics company that deals directly with what people buy and sell.
Yeah.
It's fairly obvious that would have an almost immediate benefit of any kind of turnaround or stabilization in the economy. But to get back to whether one should buy it, one should definitely hold it. Don't be surprised if the price comes back. I mean, it's I don't know, it's probably about 10 or 15% up in the past 2 days.
Yeah.
But it gets to a viable position and you're not too worried about short-term moves. I think it's difficult to compete with them, considering their the volumes they are dealing with. You're not going to load a bakkie and start moving consumer goods around to your nearest shop and try and compete against these guys. So I think there's a relatively big moat. They've operationally doing it very well, and it really is at the face of what is happening, not only locally but also obviously in the countries that they operate economies.
All right. Well, gents, let us get to your stock picks for today. JP, what are you picking?
So I'm picking a local company with this new dawn we are experiencing, Cashbuild. If you look in the last few weeks, a lot of the retailers have bounced quite hard. Cashbuild hasn't. Things are currently still tough in the home improvement sector. Think about the lack of demand for building supplies as people spend money on improving their houses. I mentioned that building is expensive relative to existing houses at the moment. But at some point, I do believe that if the economy gets stronger over the next few years, people will have more discretionary income. They will spend that income on improving their homes, and that will benefit the likes of Cashbuild. So tough today, but the whole point about investments is sometimes you need to buy things before you see the light at the end of the tunnel. And then as long as it's not an oncoming train, you can do well when you exit the tunnel. So I hope that Cashbuild is one of those. And I think at the current price, there's not a lot of optimism discounted where we are, while the future might look a bit better than what the current price implies.
All right. Ricus, are you choosing a property company?
Yeah, it's Spear Property. They focused in the Western Cape. Since COVID, they've actually tracked the overall, the all share index, which is not bad for a property company. They're giving you an historic yield of about 8%, but there's more to my thoughts than just value. With our new dawn, as JP just mentioned it, if it doesn't work out, it doesn't matter, because Spear's in the Western Cape and they've been handling this dire economic situation very well by being focused in the Western Cape and doing very good capital allocation, being in the right sectors, whether it be industrial or retail. If things go well, the Western Cape will also do very well, and Spear will do very well. So it's a bit of a tails you win, heads you win as well, as far as that's concerned.
All right. Well, thank you so much for your time and for your insights and analysis today, gents. Much appreciated. That is all for tonight's Stock Watch. Thanks to our guest, Jean Pierre Verster from Protea Capital Management and Ricus from PSG Hole-in-One Rumsig. Up next, the close. Stay tuned.